How's it going?
Pretty good. How are you?
Good. Oh, thanks.
All right, so happy Truth Day to you. As I said, I wanted to cover taxes a little more in depth with you today. We'll also review for your Unit 8 test. Tomorrow, you'll take your Unit 8 test. It's very short, it's 25 questions, so it should be an easy week. Next Monday, I'll go over what you're going to do. Actually, Monday's off, right? It's a holiday. So Tuesday, I'll go over a federal tax return with you. Wednesday, I'll go over the state tax return with you. You'll have nothing outside of class, no requirements for that, unless there's an assignment that you have not turned in. Remember, Friday, June 4th, 3:15 is the cutoff for all grades except for final exam, which will be the final week. Your graduation was changed to June 10th at 7. Here on campus, 2 tickets per person, so you should check your canvas or email. They've sent out information about that. So we'll take a look at taxes and kind of explain the tax system here in the U.S. We'll review for your Unit 8 test, and then we'll get you out of here as quick as possible. So a couple of things, and we talked about this in a general sense, right? But in this country, taxes are a charge put on people or property by the government to pay for things that have a public purpose. In this country, we generally have 3 functions for our taxes. To pay for public goods, schools, roadways, interstate highways, correct problems of negative externalities, right? So an earthquake comes through, a fire comes through, natural disaster, right? There's funds that are given and paid out to help those people. And then also taxation helps to stabilize the economy and keep it slow and steady. If you raise taxes on the general public, the federal government does, you take money out of the economy and slow down inflation, right? We're about to hit an inflationary time period probably as fast as the housing market is increasing and other things and economic indicators. So you'll see, right, and the Biden administration has proposed this, a tax increase on some wealthy people making over $400,000. So the federal government gets their money from these sources of tax. Individual income tax, which is what we'll cover next Tuesday. Social Security tax, everybody in the United States pays into Social Security, I'll explain that later. Corporate taxes, right, on your profits. We've talked about that before. And then an excise tax, probably the most popular excise tax in terms of the government is going to be gasoline. If you go to the gasoline station and you look at the pump, there's going to be a sticker and it's going to list federal taxes, state taxes, local taxes, county taxes, city taxes, whatever it is. But it'll tell you how much you're paying in tax on a gallon of gasoline. The government takes that money that they collect, right, and then pays for programs such as income and Social Security, health and Medicare. Remember, care is care for the elderly. Medicaid is aid for the poor or who are below the poverty level. They pay the interest on the national debt. Our national debt has increased obviously during this pandemic because of the amount of spending that we've done. National defense, and then education and training, right? So that's where your tax money goes and what it pays for, right? All in an effort to keep the economy stable, correct problems with negative externality, and pay for public goods that otherwise would not be provided. So when we talk about taxes, this last election cycle between Biden and Trump, what you had was a debate really between the benefit principle of taxation and the ability to pay idea of taxation. Biden-Harris, right? The Biden-Harris ticket, right? Want to raise taxes on what they call the wealthy, those making over $400,000 a year. Trump and Pence were more benefit principle of taxation. Right? Benefit principle taxation says those who benefit should pay the tax. Biden and Harris say those who best can afford to pay should pay the tax. And so that was the debate that you had there. So when you look at these principles, a progressive tax is a tax that takes a larger percentage of higher incomes and a smaller percentage for lower incomes. That's what Biden and Harris are proposing. Trump and Pence, right, basically were aggressive tax. A tax that takes a larger percentage for lower incomes and a smaller percentage from higher incomes in hopes of the Reagan idea or the Reagan ideal about supply side economics, right? The more money the business has, the more that they spend, the more people they hire, the more money that gets in the economy, right? And it's probably some sort of mix between the two is going to be best in terms of stability. Now, everybody talks about the Trump tax cuts. And basically what it was a restructuring. There were 8 tax brackets when Trump became president in the federal income tax bracket. He basically combined those into 5. So it was really a reshuffling. The percentages went down, the top percentage went down basically, but he took 8 and narrowed it to 5. So when they talk about the Trump tax cuts, what he did was take 8 brackets and reduce them down to 5. Biden and Harris are talking about, right, taking these 5 brackets, but increasing the percentage that these top brackets pay. So it's really a combination of both in terms of what's going on. But you'll see this play out as it's been proposed. And then obviously, as you know, Congress is the one that gets to pass tax legislation. And it's not the president. The president can propose it, but it doesn't happen without congressional approval and a bill for the president to sign. When you get into these tax debates, right, you want to know in terms of what you have, what type of tax you're talking about. A proportional tax is a tax that takes the same percentage of income from all taxpayers. Basically, what this is what's called a flat rate. It's called a flat rate tax. And you've heard this been debated before, right? Everybody says, get rid of the IRS, just charge everybody 10, 15%. So if you made $100,000 a year, right, made $100,000 a year and it was 10% tax, you tax the federal government with $10,000, right? If you made $1 million a year, right, the flat tax in terms of that is going to be $100,000. So that's what a flat rate tax is, proportional tax. And people have talked about that. I think Steve Forbes ran for president in the 80s on the Republican side, and they talked about a flat rate tax. Get rid of the IRS, get rid of all the bureaucracy, just charge everybody 10%. A lot of people talk about a national sales tax, right? When you go buy something at a store, generally you pay a county tax and a city tax, and that makes up your sales tax. If you travel in Europe, there's a lot of countries that have a national sales tax. We do not. So a lot of people talk about that in terms of maybe allowing something to happen. A direct tax is a tax paid by the person who the tax is levied against. Your best example of that is going to be people who own houses, right? People who own houses pay what's called a property tax. You get a property tax bill and you have to pay that off. Now, property tax bill is only on that person. It's not on your neighbor, it's not on the neighborhood, it's not on the city, it's on the person that owns that house. That's a direct tax. Indirect tax is the tax paid by someone other than who the tax is levied against, right? One of the most recent examples I was reading a story the other night where a couple of years ago, right, all the resorts in various locations started charging a resort fee, right? Said for parking, for Wi-Fi, whatever it may be. Well, I read a story now, right, because electric companies have figured out, hey, if we charge more during peak hours, right, we can make more money because people are using our electricity. So there's a resort in Vegas that is going to start charging an electricity fee, right? Basically, if you rent our room and use our electricity, we're going to charge you a fee. Well, they're doing that because they're passing on a charge from the electric company. The electric company is charging them extra, and obviously in Vegas, it's very warm in the summer in the afternoon. So they're charging a fee for them, and they're passing that on. They're passing that on to the consumer. So that is an interesting development in terms of what you have there. But that would be an example of an indirect tax. Corporate taxes we talked about before, right? The tax on the earnings of corporations. Corporation and the corporate tax rate is changed depending on who is in the White House, who controls the Congress. Sales tax is a tax on goods that are bought. The one thing that you want to realize about this is that sales tax vary from state to state, county to county, city to city. State of Minnesota, where it gets very cold in the winter, they don't charge tax on clothing. You can go to any clothing store in the state of Minnesota and not pay a penny of sales tax, right? You go into Kohl's, JCPenney here, right? You're paying a sales tax. Arizona sees food as, and labels it as a necessity. So there's generally no tax on food, similar to what you have here, right? You don't pay tax on items at the grocery store unless they're pre-made or ready for you to eat. So if you go to the deli and buy, a rotisserie chicken, you'll pay a tax on that. But if you go buy whole chicken in the meat section, you take it home, you don't pay a tax on that. So sales tax depends on the state, the locality that you're at, and it can vary. Excise tax is similar to a gasoline tax that we talked about before. It's only a tax levied on a specific item. So gasoline, 2.5 years ago, the city of Seattle put in an 18% tax on liquor. If you don't drink alcohol, you don't buy liquor in Seattle, you don't pay the tax. So that's what an excise tax is. Property tax we talked about is a direct tax. It's only on those people that own the property, right? And it's basically on assessed value. Generally, it's per square foot, and it's generally an assessment based on that. Social Security tax we talked about before. Social Security tax is generally a tax that is 3 generations old. So when I started working, right, my first part-time job when I was 16, I basically paid a Social Security tax that was going to my parents now, and that had gone to my grandparents then, right? And it basically, right, involves 3 generations. So my grandparents, right, are all dead. My parents, right, I'm paying into their Social Security. My children, my 2 oldest, have part-time jobs, right? They're paying into my Social Security and their grandparents. And then my parents' generation, right, goes away. My generation will be the oldest, getting from my children and then my grandchildren. So generally it works 3 generations in a row. Remember that this is the federal government's basically retirement program for all people. Came about Roosevelt and Truman after the Great Depression, we need to have some sort of safety net for people who don't have 401 accounts, right? 401k, 401b, things that we talked about. Questions on that? Okay. So what we'll do next is do the 25 question review for Unit 8. Make sure you're ready for that. So I'll put the join code, the PIN code on the screen in the chat room. Remember that it's kahoot.it. And that's so kahoot.it. And join code will be 3893658. That'll be on your screen in the chat room. And so kahoot.it 3893658. Okay. So I think even, so I said the Unit 8 test is very short, 25 questions. I think they might even be the same order that I have on this. So you want to use this for your notes and any of your things. The discount rate is what? We talk about the discount rate. What is the discount rate? Okay, the discount rate is what the Federal Reserve System charges commercial banks in our country. So any of the commercial banks within the 12 districts, right, that is what they charge them. The money multiplier formula says what? What does the money multiplier formula tell us? Right? Determine the amount of new money that will be created. Right? Determine the amount of money that will be created. If the Fed wants to reduce the money supply, what can it do? If the Federal Reserve System wants to reduce the money supply, what can it do? And remember, the Fed is in charge of monetary policy. Increase the discount rate, right? So remember, monetary policy is basically interest rates and daily securities. If the Fed wanted to reduce the money supply, if you increase the discount rate, the amount that they charge banks to borrow from them, that would cause the banks to increase the amount that they charge us as consumers to borrow from the banks. That would mean less people would borrow money, and that would decrease the money supply. What is the required reserve ratio? What is the required reserve ratio? Comes about in the Great Depression because of the bank failures. Right? The reserve that the Fed, bless you, the reserve the Fed requires banks to have to deposit. Remember, one of the big problems with the Depression is the banks had to shut down, and the banks failed because they didn't require, or there was no regulation to keep a certain percentage of cash on hand to give to customers if they came. It is now required by law that all Federal Reserve banks keep a certain percentage on hand of cash in case people want to come withdraw. Too much money in the economy leads to what? This is what they're worried about right now. A general rise in prices or inflation, right? Too much money, too many people. This is why the housing prices are going up so much, right? Housing prices in California are up as much as 40%. You have so much money available, right? And people are spending, right, money that they have, and there's not enough houses to go around. The prices of the houses keep going up because there's not enough supply. Which monetary policy tool is considered an expansionary tool? Which of these would grow the economy? Decreasing the discount rate. Decrease the discount rate costs banks less money. To borrow cash. That savings would be passed on to consumers. Consumers then would start borrowing more. All right. The interest rate that banks charge each other for loans is called the what? Federal funds rate. The federal funds rate is the interest rate that banks charge each other for loans. What is the main idea of monetarism? What is the main idea of monetarism? relaxing down today. Tired? This one? All right, so monetarism is the idea that the money supply is the most important factor. If you can keep the money supply stable, right, you'll keep the economy stable, be very little inflation, the economy will grow at a steady pace just like you want, right? We want GDP between 1% and 2% a year. What is the Fed's most important monetary policy tool? So the Federal Reserve System, what's the most important thing that they can do? Open market operations, right? The daily buying and selling of securities is the most important thing that the Fed can do with monetary policy. The most important thing they do on a day-to-day basis is the check clearing process, right? The electronic transfers that take place, EFTs. Which of the following actions would the Fed take to fight inflation? Okay, first, right, the Fed is only in charge of monetary policy. So that is changing interest rates or buying and selling securities on a daily basis, right? So anything dealing with the government is fiscal policy. So that red is why that's not right. If they increase the money supply, it's actually going to grow inflation. Government is the only one that can raise taxes or lower taxes. And so they want to reduce the money supply. When you have an inflationary time period, basically you have too much money chasing too few goods. That's why you see the increase in housing prices here. What is monetary policy? Actions the Fed takes to influence inflation and real GDP, right? Monetary policy is Federal Reserve System. Fiscal policy is government. All right, when you look at the Federal Reserve System, who is overseeing the Federal Reserve System? Who oversees the Federal Reserve System? In your Chair the Fed game, they talked about this in one of those video clips that I put on your module. Okay. Board of Governors, right? There's a Board of Governors, each of the district banks. There is a representative from each of the districts on the national, right, Board of Governors, and then the chairperson of that Board of Governors is the basically chair of the Fed. Who owns the Federal Reserve System? Who owns the Federal Reserve System? Member banks, right? All of the member banks within each of the districts are the ones that basically own the Federal Reserve System. They're all part of the Federal Deposit Insurance Corporation. How many Federal Reserve districts are there? There's 12 districts. We are in District 12. Our district bank is in San Francisco. The main idea of the multiplier effect is that what? What's the main idea of the multiplier effect? Right? Every dollar the government spends, it creates a greater than $1 change in the economy. That's what they believe the multiplier effect does. Which of the following might be part of an expansionary policy? Which one of these would help the economy grow? Tax cut, right? Tax cut is going to put more money into people's hands and they'll spend more. Increased taxes takes money away. Lower government spending, less money in the economy. Mandatory spending on specific programs does not go back into the economy, it only goes into those programs. A budget surplus occurs when what happens? Budget surplus occurs when what happens? Right? Budget surplus is when you bring more money in as a government than you spend. And you have a surplus for that. All right. A supply side economist would be in favor of what? This was the big economic theory in Reagan's administrations. Right? Cutting taxes. So supply side economists believe that if you put more money in the hands of businesses, right? Businesses on the supply side, that money will then be spent on expanding their business, hiring more people, right? Helping the economy. That's what a supply side economist would argue. What is the main goal of a government's fiscal policy? What's the main goal of our economic fiscal policy? Right? This is stable economy, right? We want to control inflation. We want 1 to 2% growth in GDP a year. What type of fiscal policies did President Roosevelt carry out after his election in 32? Right? The Public Works Administration, the Civil Corps of Engineers, all of the Tennessee Valley Authority, all of those programs would be considered what? Expansionary, right? Roosevelt's policies after or during, right? Trying to take care of the Great Depression were expansionary like the country had never seen before. When government revenues and expenditures are equal, what is there? Revenues and expenses are equal. What do we have? What sort of budget? Balanced budget. Balanced budget. Budget surplus, more revenue than expenditures. Budget deficit is what our country's in now, where we have more expenditures than revenue. The national debt is right? The total amount of money the federal government owes. Total amount of money that the federal government owes. What program provides the largest source of funds for health care for America's poorest people? Very good. You got a lot more right than period one did. So remember, the only way that I keep track of this is aid. Aid goes to, right, those people below the poverty level or the poor. Care, right, goes for those 65 plus, right? We care for the elderly. We aid people who might be below the poverty level. That's the best way to keep that straight in your mind. That's how I do it, at least. Who was given authority to levy taxes by the framers of the Constitution? We talked about this earlier. Congress. Congress, all right, is the one that can levy taxes. President can propose it. Congress is the one that has to pass it. Then the president, he or she, can sign it or veto it. The federal income tax is a what type of tax? Remember we talked about Trump, right? Taking it from 8 brackets down to 5. Even those 5 brackets, whether it was 5 or 8, what type of tax do we have? Good. Progressive tax, right? And the reason that it's a progressive tax is within those 5 brackets, right? The more money you make, the higher percentage of tax you pay. The lower amount of income you have, the less percentage that you pay. That's why it's a progressive tax. Tax rate goes up as you make more money. All right. Go. Okay. So real quick, as I said, tomorrow I will give you time in class to complete your exam. Okay. So we did the review game. I think the review questions are exactly in the same order as the test. So if you want to go through that, take notes on that, you'll do very well on the unit test. The unit test is very short. It's 28 questions. Now, if you notice, and as I mentioned at the beginning of class, the fiscal shift game is still an assignment. The chair of the Fed game, as I'll show you, right? I just cannot get to work at school on any device or at home on a school device. So if you take a look at, and if you notice this in Aries, that change was made yesterday. But basically what I did was I kept this assignment, and remember that you need to send a picture or a screenshot of either, right? But this stayed as an assignment. The points possible here, I switched to 0. If you were able to do the chair of the Fed game and got it to work, it was extra credit. If you were unable to get it to work, it is not counting against you. But as I said, what happens is when I go to chair the Fed here on any sort of district device, it just will not load for me. It'll let me change the interest rate, right? Try to keep inflation steady and unemployment low, but then it does not proceed through the game. You're supposed to play 16 quarters, 4 quarters for a year. You're chair of the Fed for 4 years. It'll let me make these changes, but it doesn't go away. So you see, you're supposed to play 16, right? Let's say that I raise this. It'll let me do this, but then when I go to go, it doesn't move. It just cycles through. So I don't know what the deal is. Tech team can't figure it out. So that's why that was changed to extra credit. So if you're unable to do it, do not worry. It is not counted against you. Those of you that had done it or are able to do it, you're still getting points. This term's extra credit. So I told you I won't have you do anything in class that you're not getting credit for. And then, as I said, tomorrow you'll have time during class to finish this unit test. It's only 25 questions, so it should be very easy. Next Tuesday, Monday is National Holiday, Memorial Day. Next Tuesday, we'll do a federal tax return together. And then Wednesday, we'll do a state tax return. You'll have nothing outside of class to do. So your wellness week will be basically intact. And then, as I said, June 4th at 3:15, everything from this quarter has to be turned in for full credit, no questions asked. But then after that, all you have left is the final exam. All right. Questions or concerns, you can hang on. Otherwise, you can log off. It's up to you. And we will see you tomorrow. Any questions?